I've been having a lot of interesting discussions about the economy lately with some friends of mine who don't have jobs that pertain to the economy, except for one guy who works for a bank, which I suppose has something to do with the economy. Everyone's got a different take. Oh, oil is going to be worth about $100 by the end of the year. Forestry stocks, buy them now because of all the problems with the pine beetle. Moreover, there's a lot of cluelessness out there. And I'm not talking about my circle of friends in case they're downloading this. But there is a lot of cluelessness about the economy. Like, somebody was saying the other day about how Ben Bernanke says something positive about the economy. And look, it's green numbers. So why don't these big influential economists always say good things about the economy? I mean, Stephen Harper and Mark Carney have said that, yeah, the Canadian economy is not so bad. We might be out of this by the third quarter. And the market reacts somewhat positively. But look what happened to the TSX this morning after former Bank of Canada chief Dave Dodge said, "Oh, we're in for a long and bitter recession. It's going to fundamentally change capitalism. It could end the Canadian automotive industry. It'll be years before we get out of it." The TSX went into sell-off mode as if Godzilla hit Bay Street. But we've got so much information that we can misinterpret now. And who do you blame for that? One person, the eTrade baby. I'm just speaking for myself, and I know that I, a radio DJ and blogger, could not be a mutual fund advisor if an infant strapped to a high chair hadn't convinced me that short selling was as easy as vomiting on the keyboard. Millions of Super Bowl fans decided they would grab the wheel and start steering their 401ks and RRSPs for themselves. They're using then some eTrade analytics. Don't get me wrong, I love eTrade, or as we in Canada call it, not eTrade anymore. But I love it for one thing, and that one thing is about 5% of my portfolio. I have two pieces of advice. One, watch the markets, review their histories, and see how the TSX and the Dow coexist. Find out about crude oil prices and how it's tied to the Canadian dollar, T-bills, mortgage futures, the Nikkei, the NYMEX, hedge funds, oil strikes in the Arctic, pork bellies, Barack Obama, and familiarize yourself with Canadian financial securities dividends. The second piece of advice is, let a professional handle your money. There's people that know all that stuff and get paid to know all that stuff. Now, if you're looking for something in this economy that's constant, it's this. This will always be worth 10 cents. And that's a lot of money if all you need is 5 cents.